Hi, this is Thierry Samlal from PMML. Today I'll present to you the market statistics for multifamily in the province of Quebec for the month of March 2025. So this month, I want to start off by presenting you some market statistics as far as volume, because I want to show you exactly in the last quarter, say trimester, because we're going from December 2024, including January and Feb 2025, what is the market volume? What's the average cap rates? What's the average price per door? And in which markets are we selling the most buildings and which are we selling the less, so that you know exactly, where you're going to be heading this year as a buyer, and if you're a seller, what's your positioning on the market, right? So let's start off with the full province of Quebec. 676 transactions took place between the 1st of December 2024 and the last day of February 2025. On that, 13 transactions took place in Outaouais. Now, don't forget one thing, from month to month, it's about the same number of transactions in the Outaouais-Gatineau region, right, which is next to Ottawa, but on the Quebec side of the border. But there's a lot of land sales and also commercial strips and old left for granted industrial buildings and old residential properties being destroyed right now, and holes being dug to be built larger assets in concrete or wood and brick for multifamily purpose. So that's what's taking place in Gatineau and Outaouais, and that's why the number of transactions are small. If we're going into Montreal, 181 transactions. We're maintaining that pace. The last trimester before, we were 159 transactions that took place. Montérégie, South Shore of Montreal, first outskirt, 88 transactions, most of that in Longueuil, Saint-Hubert, Brossard, the main areas close to the bridge and close to the island. Laval, 12 transactions only. Really interesting to see that Laval only 12 transactions. The thing is, Laval always had lower number of transactions, but always sold for a much more compressed cap rate compared to Montreal. Here, the cap rate is 3.56% in the context where the average cap in the whole area of Montreal is about, say, 4.3 to 4.5. If you're stretching it out, it could go all the way down to 4.1 in average. That's an average. That's not sold prices. You're seeing cap rates at 3.3 in Montreal, and that's standard market, but there's also higher cap rates being sold. If we go to Sherbrooke, the Estrie region, 57 transactions. We're maintaining the pace. The previous trimester, we were at 37. So those are 20 extra transactions in Sherbrooke. Sherbrooke is red hot right now. I mean, now the prices are increasing in Sherbrooke. Now the real under-speculated market is the market of Three Rivers and Shawinigan. La région de la Capitale-Nationale, like would say the people from Quebec City, 115 transactions. That's huge. The previous trimester, we were at 72 transactions. So that gives you a general gist of where we're going as far as volume. Let's look at the average price per doors. In the Gatineau region, average is 171 per door. Montreal, 183 per door. Gatineau is picking up the pace there compared to Montreal. Montérégie, 172,500 in average per door. Want that Montérégie is picking up in value. Not too long ago, we were at 150,000 per door. Then we went to 160,000 per door, and now we're close to 172,000. I'm telling you, prices are increasing. We've been saying it over time, and the only reason for that is the rent increases and a lot of dry powder available on market, and people are willing to squeeze out the equity of their buildings to purchase more assets because they know for a fact that these assets, there's more and more buyers on the market, there's less and less assets available, and often there's competition when you're buying an asset. So, do you want to buy now, or do you want to wait later on and have much more competition in your purchase? Then we're Montérégie, we've done Laval, 192,000 in the average per door. Estrie, Sherbrooke region, almost 142,000 per door. And Quebec, la Capitale-Nationale, including Lévis, including Quebec City, including all of the outskirts, we're talking about 137,000 in average per door. Now, that being said, market is maintaining, interest rates are low, market confidence is high, the buyers are working on the market to purchase assets to reposition. There's a lot of sellers looking to sell, but at the right price. So, it's a melting pot for everybody right now, and everybody can find the situation that's best for them. Let's go talk about the City of Montreal buying out the Capri portfolio of 32 units located in Côte-des-Neiges. Côte-des-Neiges, as you know, a lot of apartment buildings, a lot in the 20-ish to 30-ish door range, a lot with smaller units, studios, 3.5, 4.5, some with garages, a lot with owner-paid energy costs, a large population of tenants which are going to the University of Montreal and other universities, a lot of immigrants in that area, the metro stations, etc., etc., etc. There's a lot of activity in that area. These buildings, this portfolio of 741 units sold for close to $104 million with an average of $140,000 per door. So the City of Montreal exercised its preemptive right here and purchased the Capri portfolio. There have been discussions. Capri announced in 2023 that they wanted to sell assets across Canada that were not of its interest anymore and was going towards more newer build assets or assets which are recently built that have squeeze on them, capacity of increasing the rents. At the time, Benoit Doré, the City of Montreal, had publicly invited Capri to call him directly to do a sale, but as those Capri being an institutional player, which is the largest public player in Canada that for as far as multifamily housing, and the City of Montreal being a public figure also, they both have to go to market, and this is what happened. But the City of Montreal had a joker card in their hands, and what they did is they applied the preemptive right, and they did the purchase at $140,000 per door. And this is an historic event that took place in the province of Quebec, but it's going to influence all of the transactions across Canada. Let's continue to portfolios, a small portfolio of 5 buildings being sold in Laval. Remember, I told you Laval, 12 transactions last month, meaning February, but this is one of them. So 5 buildings, 84 units, sold for almost $200,000 per door. Interesting transaction bought by a private. There's a lot of small portfolios being sold right now. Interesting to see that owners are willing to sell them one shot. Now let's go to Westmount. We don't talk about Westmount that much because there's not any multifamily buildings that sell in Westmount ever, because there's almost none which are built. But this one here, a building of 27 units, are you sitting down? $415,000 per door. Now, which is normal in a market like Westmount. Hard to comprehend for an investor which doesn't know that market. Why would I pay $415,000 per door? But if you compare to the condo market in that area, the capacity to go get the rent to back up the $415,000 per door, you can get rents in Westmount for apartment buildings, because there's almost none built, at the same price as new build in Montreal. So that's what's sustaining the price of $415,000 per door. Also, what sustains the price is the quality of the asset, how the building looks, the height of the ceilings, the wooden doors, etc., etc. Talking about portfolios again, let's go into Shawinigan. I don't know if you remember earlier, I told you that Three Rivers was an under-speculated market. The price per door is still cheap in Trois-Rivières, but Shawinigan is the satellite of Three Rivers. It's even cheaper. Here we have a transaction that took place at almost $83,000 per door for 9 buildings, 96 units in total, a transaction of $8 million. Let's continue into portfolios. Longueuil, 3 buildings being sold for a total here of 34 units at an average price which is right almost the Longueuil average of $168,000 per door. This transaction took place at that value. and the average price per door in Longueuil is somewhere between $165,000 to $170,000 per door. Why almost? Because it varies all the time, but it's in that range. Cap rate here, 4.35, which tells me that probably this property could have sold for a little bit more because cap rates in Longueuil are even more compressed. Let's go into Laval, 29 units, recent asset, $193,000 per door. Interesting price. Outremont, similar to Westmount, 17 units, $297,000 per door, cap rate of 3.31 on Van Horn. Van Horn is Rosemont Boulevard, but once you go over into Westmount, into Outremont, it becomes Van Horn. A property in Granby, I'm jumping from one place to the next, I just want to show you market here. A property in Granby, wood and brick, 2022 construction, sold for $299,000 per door. Cap rate is unknown on that one. And let's finish by Plateau Mont-Royal. Never forget the plateau. Well located next to the mountain. European clientele, capacity to maintain those rates high, even if you have smaller units. Once they're clean, once they're renovated, even if the kitchens and bathrooms and the rooms are small, they will go for a high rental price. And this one went for a 1910 asset at $292,667 per door at a cap rate of 4.3%. So that's almost $300,000 per door for a nice, clean 1910 asset. Now, I hope this information was useful to you. If ever you have any questions, just feel free to send me an email, text over, or call in. PMML.ca for all of our opportunities. And one thing that I can tell you for sure is all of these transactions have already factored in the rent increases. Historically, we used to wait till the end of March to factor in the value of increases. But since the past 2 years, the market's already starting to absorb it in advance, starting, say, February. And we could see it here because at the prices that these units are sold at, they're already calculating in advance the rent increases that are going to take place in July. So I hope the information was valuable to you. Have a great day and best of luck in your real estate adventures.